Good morning. 大家早安. And also good evening, my friends in New York. I am Wu Daokui, DK Wu, the CEO of Taiwan Impact Investing Association, also the moderator of this session. Welcome all of you to attend this session. Well, let me real quick to introduce some of the organizations we invited for today for this session. First of all is GIIN. GIIN, I think everybody knows about GIIN, Global Impact Investing Network. I think the most important organization in the world to drive impact investing. And Ford Foundation, wow, this one is also missed. The Ford Foundation is one of the largest foundation in the United States. And in impact investing field, they are initiators, they are innovators, they are supporters, very strong supporters, and also they are very important practitioners. And then KPMG is the leading firm in sustainability professional services in the world. And Zhongguo Xintuo CTBC is the leading financial institution in Taiwan and is the first GIIN member in Taiwan and also the major sponsor for this session. Personally, I'm very excited to invite all these four very prominent organizations to join us. Let's have a very warm welcome to all of them. Session will be divided into 3 sections. The first section will be a presentation by our friends from New York. Originally, our design is 10 minutes for each, so we have 20 minutes for the talk. And then the second session, our panelists, 2 panelists will join us to have some discussions for 15 minutes. And then we open for the audience to have a Q&A for another 15 minutes. Before we start the program, I'd like to invite them to make a brief introduction about themselves. And the first one, I would like to invite Margot, Brandenburg. Margot, to invite her as a first to show my personal respect to her, because she is actually my teacher. I know you laugh because she is very young and I'm very old. She is actually my teacher. Her book, like to show you, her book, The Power of Impact Investing, is the first book I read in this field. And this book let me get into this field. So Margot, thank you very, very much. And please introduce yourself to our audience.
Thank you, DK. Those are beautiful words. I appreciate them. And good morning, everyone. Thank you for letting me join you all the way from New York. My name is Margot Brandenburg, and as was mentioned, I'm currently a senior program officer at the Ford Foundation in New York City. But I've spent the past 20 years really working at the intersection of profit and purpose, an area that lots of people still don't understand, but I know this group not only understands, but appreciates. And I started out in international microfinance, mostly in sub-Saharan Africa. And then I switched to what's called community development finance in the United States, working locally on small business lending. And then joined the field of philanthropy almost 15 years ago because in part of all the tools that are available in the philanthropic toolkit. And I was lucky to join the Rockefeller Foundation and to be part of a team that created this term, impact investing, and was lucky to start some of the organizations that we all rely on today. So GIIN was created in one of our conference rooms. And I left philanthropy to start a B Corp, to start a mission-driven business focused on climate change adaptation. And after doing that for 5 years, I sold it to another B Corp, and I joined the Ford Foundation last January. Thank you again for having me today.
Thank you very much, Margot, my teacher. Sean is not here, so we reserve this part later. And Niven. Niven is the most knowledgeable person in sustainability area, as so far I know. Also a teacher.
Thank you very much.
So please.
Thank you very much. It's really my honor to have the opportunity to join today's panel. My name is Niven Huang. I get involved in sustainability professionally 25 years ago. I joined WBCSD, World Business Council for Sustainable Development. The headquarters is based in Geneva, and I was appointed as the Secretary General of BCSD here in Taiwan in 1997. So I was the Secretary General for this organization for 16 years, and during 2012 to 2015, I was appointed as the chairman of the advisory board of the Association of Sustainable and Responsible Investment in Asia. And this organization is based in Hong Kong. And in October 2015, Hsia, this Sustainable and Responsible Investment Organization, has been merged by UNPRI. And Gilbert was my former colleague. So he worked for KPMG in Beijing a couple of years, and because he hasn't online yet, so I can also ask something about my relationship with Gilbert. And he lived in Taiwan 25 years ago. He lived here, I think it's around 11 years, so I could work with him on sustainability reporting 24 years ago. Then he moved back to United States, based in Boston, worked for Talos Institute, GIIN initiative. And then this organization was officially become an international organization, then moved to Amsterdam in Netherlands. And then 10 years later, he moved to Beijing to be the representative of GIIN in China. And then 2 years later, he was invited to become our colleagues in KPMG, China. I was invited to join KPMG as a partner in 2013 by Charles. He is my boss. So up to now, I have been with KPMG for 8 years. And 4 years ago, I was appointed as the regional leader in Asia Pacific for taking care of sustainability service up to now. Thank you.
Please.
Hi, I'm Winston. First of all, I'm really grateful that Premier Chen had the opening remarks. We're really, truly among teachers, and we're very grateful that over the last 20 plus years of his public service, he's brought us a lot of ice cream, right? And so from now on at China Trust, in the future, when we do things, we will be supplying ice cream to some of our colleagues as well. I think it's really important that we should have some fun with this as well. I've been with China Trust for about 10 years, and I think I'm really proud that in the last year, we've become members of GIIN. I think it was December 1st last year. And one of the things that's really cool about China Trust is that it's interweaved with impact investing has been part of us ever since we've been in existence in the last 50 years. It has not necessarily been part of a structure. And I think the events like this and organizations like GIIN and TIIA are very important so that we can create structure around what we do in the future. And so we look forward to the rest of this discussion, and hopefully you guys will enjoy some of our comments. Thank you.
All right, just got, thank you. Thank you for your introduction. And we just learned our New York friend, Sean Gilbert, is online already. Sean, hi. And Sean, as Niven mentioned, Sean lives in Taiwan for quite some years. He may have more friends than I do in Taiwan. So Sean, would you please to say a few words to introduce yourself? Thank you.
Good evening. It's a pleasure to join you. 有点后悔我没有办法亲自在场参加今天的这样的会议。But 我是希望以后明年我已经有2-3年我没有机会回去台湾，因为现在以目前的 COVID 的情况来看的话，回去比较难。但是希望我再过1-2年还会有一个机会回去看大家，然后可以一起进行讨论这些事情。那I'll switch back into English since this is a panel in English, but and it's also a lot easier that way. But I'm a director within the Global Impact Investing Network. As Niven mentioned, I lived in Taiwan for a number of years, where I worked with many people who've been involved in the sustainable business and sustainable finance community. Within the Global Impact Investing Network, my responsibilities are around working with our international network of partners and also working to activate new communities of asset owners to introduce them into impact investing.
Sean, let's continue your, after your introduction, continue the talk so we can have your PowerPoint.
So maybe I'll just offer a few quick introductions in terms of impact investing and a bit in terms of some of the developments on a global basis. If I could get the next slide, please. For people who are not familiar with the Global Impact Investing Network, let me just take a very quick moment to introduce it. The GIIN is a nonprofit organization that's been developed. It was started about 10 years ago. Our mission is to try to increase the scale and effectiveness of impact investing around the world. And we do that through 3 general areas of work. The first is we conduct research that helps to support the understanding of impact investing practices and the size and the shape of the market, to help support the development of industry and help practitioners better understand sort of wider trends in the landscape. Second thing we do is we develop tools and guidance and other practical resources that help investors actually implement impact investing practices. And then the last is we manage a global community of practice who work under a membership structure, but they are partners for us in terms of working together in terms of helping to innovate practices and try to help develop the marketplace. Next slide, please. Now, when I speak in terms of impact investing, it's always worth taking a moment very quickly just to explain what we mean, because there are many different terms that exist around how people talk about finance. And if this slide has some animation, so if you could just click a few times. So you have frames, thank you, that's a good stop. So you have the international language around ESG, responsible, ethical. You've got the language that's used in mainland China and in Taiwan around 社会责任投资或者绿色金融. All of these are different words that have a similarity in that they are describing the use of environmental and social information in an investment process in a standardized way. Where they differ is the reasons why they use environmental and social information and what objectives they're pursuing. Next slide, please. So when I speak in terms of impact investing at the GIIN, we're specifically referring to a focus on investment strategies that, as part of the investment strategy, are seeking to generate a positive, measurable social and environmental impact. Now, there are other reasons why somebody might choose to focus on environmental and social information. Perhaps it's choosing to align with values. Perhaps it's trying to manage and avoid potential risks. Possibly it's trying to pursue an investment thesis. Those things can exist alongside and together with impact investing. But for us, impact investing is when it's that focus on the positive measurable social outcomes. Next slide, please. And so quite specifically, that means that number one, there's an intention that's expressed within the strategy so that you understand what the investor is trying to achieve in terms of real changes for the real people, real places, and real things. But that intention doesn't mean that it's something which comes at the expense of a financial return, because it's an investment strategy. So there is also a set of investment goals, which I'll speak about in a moment. And the investment strategy is managed to try to achieve those double objectives, so that just as there's a discipline for managing for financial returns, there's an equal discipline for managing for the impact returns, and they're measured and monitored with a similar kind of rigor. Next slide, please. Now, when we talk about the development of impact investing, it's grown quite dramatically. When the GIIN was started 10 years ago, it was a handful of people. I think Margot might actually be able to speak in a more personal way to that than I can in terms of what the GIIN was as a network when it started. Handful of practitioners working in different institutions, and it wasn't even really a concept within the marketplace. Move ahead 10 years from now, 10 years on, and as I mentioned, we have a network that's about 380 organizations from around 50 countries, but more importantly, when we start to do surveys, as we have been doing for about 10 years now in terms of impact investing activity, you see it all around the world. And it started in much of the concentration started in North America, but it's been growing rapidly in a relatively even way across different geographies. And I think in Asia, we're about to see a very rapid growth as well, in the sense that as we look within markets like Singapore and Hong Kong, and particularly the family office community, the next generation of family office leaders are increasingly focused on how they can bring impact into their investment strategies. Next slide, please. Now, many of these, as I said a moment ago, impact investing has a financial goal alongside an impact goal. And from our surveys, many of the people in the impact investment community are actually seeking market rates of return. So there's often a perception or an assumption that impact investing is somehow, or there's somehow a financial trade-off that must come alongside an intention to try to achieve a positive, measurable real-world outcome. But when we look at the surveys, what we see is that about 2/3 of the investors that are self-identified impact investors are seeking market rate returns. And in addition, when we survey them, about 90% of them say they're satisfied or they feel they've achieved their financial objectives through their investments. Next slide, please. And these investments are spread, again, across different asset classes. I think impact investing started very much in the space of private equity and private debt, where we've been seeing quite rapid growth over the last year or two, has specifically been in the space of listed equities. Now, I think there's still things to sort out or things to understand about how impact can be pursued in public equities. But the basic message that we've been seeing is the trend is investors across the spectrum of financial return and across the different scale of investors in the market and the different degree of and the different types of institutionalization. So from individuals to family offices to large institutional investors like insurance companies or pension funds are increasingly looking at impact as a lens across their portfolio. And then that's reflected in the fact that you see investments being placed across different asset classes. Next slide, please. And these issues and the issue areas that they focus on have also been broadening. If you look historically over time, much of the attention of the impact space has, I think, historically been understood to be focused within social areas, particularly ones around creating decent work, decent growth, no poverty, economic growth. But increasingly over time, we also have been seeing some of the environmental considerations rising up on the agenda for impact investing. And I would argue that a lot of what we see in the climate space these days is very much about impact investing. It's identifying a real world change that we need to achieve in terms of the climate, and it's setting targets and then pursuing a disciplined approach across a portfolio of investments to try to achieve that. Next slide, please. And many of these, another way to look at the interest that people have, or the interest that impact investors have focused on, is very much been around when they ask what are some of the changes that we're trying to drive. Many of these changes focus very much around providing some of the more basic services that people need. So energy, access to finance, access to food, forestry, and so on. Next slide, please. And as I said at the outset, what's distinctive in this approach that people have been doing is they start with an intention, which is to achieve specific real world changes and for real people, real places, and real things through the investment strategy. And then in the course of actually executing that investments, they're also applying they're trying to apply management tools that allow them to identify, monitor, and track their impact across their portfolio and adjust their portfolio and the engagement they have with their companies as they are going along, or as they're continuing to manage that. And we can see that again in terms of the reflection and the adoption of impact management tools. The GIIN has been developing an open source resource for about 10 years now. It's called IRIS Plus. It's freely available on our website. If people have not had an opportunity to look at it and use it, I'd encourage you to take a look. As I said, it's a public good and available for anybody. But we've seen a dramatic increase in the number of the usage of impact measurement tools. And at this point, we've seen 20,000 subscribers around the IRIS tools, and there are other things in the marketplace that are available. And all of this adds up to the point that investors are increasingly trying to find ways to bring the same sort of rigor to their approach to impact as they bring to other aspects of managing their investments. Which brings me to my last point. Final slide, please. Which is that, the ultimate message behind impact investing is that there are many different labels that we can use. There's a lot of complexity we can bring to trying to think about how we're addressing sustainability, or what the role of sustainability is in finance. But at the end of the day, the most basic message about all of it is it's really about finding ways to make sure that our capital is building the societies, the economies, and the world that we want to live in. And whatever you call it, what matters is whether or not you're deepening the ability to drive those positive changes in the world that you're investing into, and into the world that you're investing into on behalf of others. So with that, let me return the floor back to DK. Thank you.
Thank you very much, Sean, for your very clear picture about the impact investing and your global perspective about impact investing. So, Margot, we would like to turn the microphone to you. Thank you.
As Sean described, there's a diverse ecosystem of institutions that participate in impact investing, but I'm going to speak specifically about how foundations can use their assets to advance their mission. As was mentioned, I am part of the Ford Foundation, which is the largest social justice funder in the United States and perhaps the world. You could say that we focus on the S and ESG in particular. And our mission is to address inequality in all of its forms, in particular to get as close as possible to the root causes of inequality. I'm based, and our mission investments team is based in New York City, which is where our headquarters is, but we have 10 offices throughout the world, including 3 in the Asia region. And our CEO, Darren Walker, whose picture is there, is the reason I joined Ford at the beginning of last year. I think he's can be fairly described as really a sort of a visionary, and certainly someone who's been quite influential in recent years, at least in the realm of US philanthropy. Next slide, please. So I'm part of the mission investments team at Ford, which is unique for Ford, and I think unique for a lot of foundations, in that it includes 3 types of capital. We manage what's called a mission-related investment portfolio, we manage a program-related investment portfolio, and we manage a grant portfolio. And our goals are really to deploy our own capital in service of our mission and values, as well as to influence others to do the same thing. And it's perhaps redundant for some of you, but just so we're all working from the same set of information, I'll explain the distinction between our 2 types of investment capital. Program-related investments is a tool that actually the Ford Foundation pioneered 50 years ago. It's a way of using your charitable dollars in the form of debt, equity, or guarantees, in a way that advances, again, your charitable intention, but has the opportunity to recoup capital. And Ford has been making those since the beginning. We now have about $350 million in program-related investments, which are that smaller piece of the pie that Sean described. They allow us to take more risk than we're going to be compensated for from a financial standpoint. But we think of those and we treat those as being fungible with our grant dollars. Our bigger pool of capital is a $1 billion allocation from our endowment dedicated to what's called mission-related investments. This is a more recent trend, at least in US philanthropy. It was in 2017, so 45 years after we started investing out of the program side. In 2017, our board approved this $1 billion allocation for MRIs, and we invest across 5 themes, both domestically in the United States and across the Global South regions where we have offices. Those are affordable housing, biotech and healthcare, diverse managers, which is to say managers and entrepreneurs that are diverse by gender or race and ethnicity, financial inclusion, and quality jobs. Next slide, please. There's just a few highlights. I think Sean mentioned that being an impact investor necessarily means intention and rigor in managing your impacts alongside your financial return. So for our MRI portfolio, we've committed about $300 million of that $1 billion commitment across these 5 themes. And just to reiterate, these investments are intended to perform in a financial sense the same way that the rest of our endowment performs. They are intended to meet our hurdle rate and to generate the cash that funds our grant making. But they are also intended to advance these impact goals. And across the board, we invest through funds and in some cases fund to funds because we don't have the human resources capacity to make direct investments. And for the most part, actually entirely the investments we've made to date are in venture, private equity, and real estate. And we are just now starting to make more liquid investments that help contribute to the liquidity goals that the endowment has overall. Next slide, please. So I'm often asked, how big is impact investing? And Sean and the GIIN are really one of the best sources of information. As he mentioned, there's been really steady growth over the past decade. And any survey is going to be incomplete by definition, but I think the last GIIN survey from 2020 found about $715 billion in global AUM for impact investing, which, considering a decade ago no one had heard of the term, I would say is impressive. And if you consider it alongside philanthropy, it's also impressive. So in 2020 in the US, we broke all records of charitable giving. I think we topped $470 billion in philanthropy in the United States, which includes the Gates Foundation, it includes religious giving, it includes individuals giving, it includes foundations like Ford. And so that $715 billion figure in the context of the available resources in philanthropy is quite significant, right? We have augmented our ability to allocate funding for the things that are most important for us as a society and as a planet. If you think more broadly about the capital markets, and again, these numbers, really range depending on what it is that we're talking about, but $100+ trillion in assets under management. And so in that context, impact investing despite all the growth, I think is still fairly small. And what is interesting is this bigger related adjacent field of, again, sustainable investing, ESG investing, responsible investing. The terms vary, but that we see as a bridge between some of the core tenets of impact investing and really the rest of the capital market. And next slide, please. And so it's for that reason, the scale and the magnitude of the capital markets and the recognition that those capital markets work for or against all the other things that the Ford Foundation cares about. That's why we spend a lot of time and energy trying to crowd in other and hopefully larger sources of capital in service of a just world and the things that we care about. And so we use primarily grants to do what we call field building work, but we also make investments for some of the key industry infrastructure that we think needs to exist. And we pursue a number of strategies that range from incremental to more radical. We support sort of core institutions for the impact investing field, like the GIIN, to help it grow with integrity. We spend a lot of time focusing on better non-financial disclosure and standardizing environmental, social, and governance terms in order to help raise the floor, frankly, of the capital market. We spend time engaging with businesses and investors that are voluntarily engaging in what I would call high road practices, right? Incorporating impact or values into the way that they work, but also supporting policy agendas that require, mandate, or incent some of this, and try to contribute more broadly to a narrative shift about the role of capital in society. And I would say, while I'm so excited to engage with foundations that are actively deploying their investment capital, I think it's an underappreciated part of what philanthropy can do to try and build the railroad tracks or build the infrastructure that really enables a lot more capital to flow than any one of us can deploy individually, even foundations like Ford that are significant in size. Next slide, please. So if we hear how big is impact investing, we also often hear, where are we now? And so a few observations to conclude about where impact investing is, whatever it is, 12 years since the inception of the term. I think, pretty much globally, the rise and possibly the explosion of ESG investing is notable, right? It would have been possible that some of the economic anxiety that accompanied the onset of COVID could have put a chilling effect on these values-driven investments, but we've seen the opposite. Some surveys I've seen have documented more than a 10% increase in interest in ESG investing in the past 12 months alone. And, in our view of it, that creates both an opportunity and the risk of confusion. So as Sean mentioned, there's some shared characteristics between ESG investing and impact investing. And it's essentially a bridge to migrate more of the capital markets up the curve of values orientation. But a lot of that ESG investing is about improving that floor, right? Having a basic set of environmental, social, and governance data that are available to investors. And impact investing hopefully expands our understanding of what the ceiling could look like and what is possible. So I think they're both positive developments, but I think it would do us a disservice for them to be conflated into one thing. I think, COVID and the racial justice uprisings that we saw in the US and in other parts of the world have really accelerated the prominence of the S. Sean, I would say things differently. In my view of it, climate has always really been the leading edge for a lot of investors. And for a long time, those of us who focus on social justice issues, whether it's quality jobs or gender equity, felt like we were an afterthought, frankly, in some, particularly in the market rate, sort of most scaled and mainstream versions of this. And in the past year and a half, the S in ESG has really received much greater prominence, and issues and concerns that Ford was raising a few years ago, the focus on racial equity, have suddenly become mainstream topics, whereas a few years ago we struggled to even get them on the agenda of global impact investing conferences. I think if you look globally, policy and regulation are certainly driving some of this. At COP, we saw a big announcement out of IFRS that it would create a sustainability standards board. Europe is advancing through IFRAG a robust sort of taxonomy for how investors need to report on their social and environmental impacts. And so we have seen, and I think we'll continue to see, policy and regulation really driving interest and activity. Generational transfers of wealth, the amount of dollars that are due to be transferred to the next generation is somewhat staggering. Consistently, we see younger generation family trustees and family members not willing to divorce their values from the way that they invest their money. And so as we engage with family foundations and family offices, we consistently see a generational theme driving the way that capital is reimagined. I think philanthropists increasingly see investments as a tool to advance their impact. And some of the newer foundations that have been created in the US are LLCs. They're new structures that really allow the philanthropist to use a range of tools and not even to be limited to the designations that I mentioned, PRI and MRI. They really want to open up a full spectrum of opportunities to deploy their capital in a way that's incredibly exciting. And as Sean mentioned, I think we see this really taking prominence in the public markets. 10 years ago, most people would tell you you couldn't make impact investments in the public markets. And now you see, an explosion in green and social bonds. 5 years ago, you were told there's no premium on a green bond or a social bond. Now we're seeing consistently attractive premiums for issuers of those bonds. And as an anecdote, Ford last year issued our own $1 billion bond to allow us to double our grant making to meet the needs of COVID. And we had it rated by 2 credit rating agencies, but also had it rated as a social bond. And the investment bankers that underwrote the transaction estimated that we saved 30 basis points on our cost of capital as a result of the ESG investors that had so oversubscribed the bond, and supply and demand context really drove down the price. On the equity side, we see a new wave of shareholder engagement as owners really try to be active stewards of their assets. And we're starting to see a crop of listed equities, whether they're B Corps. There's a new SPO framework for some of the companies that have started to list in the past year, really sort of pushing the frontier of what it means to create impact in the public markets, which opens up, I think, a whole new other world of possibilities. So I guess in conclusion, I would say, there's never been a more exciting time, and I'm optimistic about the years that lie ahead of us. Thank you.
Thank you, Margot, for your very clear picture about the PRI, MRI, and the impact investing, and also some of your perspective on recent developments. We will get back to you later, but first, maybe I ask Niven, give some response to your old friend, Sean Gilbert's talk.
Okay, thank you. My feedback to Sean's presentation and some related to Margot. You all highlight that this definition, and you also present what kind of themes in impact investing and also the size of ESG investing and impact investing. So 2 points. There is one very important for all of us to think about, not just only definition, but I would like to highlight that I call it 3D scoping principles. 3D, that means 3 disadvantage, disadvantage areas, disadvantage people, and disadvantage issues. the ESG investing focus on triple bottom line. The bottom line in financial, social, and environment, but it might not have any significant impact. So why the disadvantaged area, disadvantaged people, disadvantaged issues need to have impact, positive impact, because based on what we have already witnessed in the last 2 years for the COVID-19 impact and also climate change impact, you know, no matter where you are in any part of the planet, as long as you get infectious, then they're going to outbreak very immediately. So we need to have a face mask, we need to have a lot of vaccine, we need to have a lot of medical devices. So if there is anyone getting involved in those areas, that have impact, because that is survival issues. So the 3D scoping principle for me is very important when I want to identify the impact investing themes, because the mainstream investor will not touch upon those areas, but it is also very important for all of our common survival or not. So that is my point number one. I call it 3D scoping principle for identifying the impact investing key themes. The second one is without impact, we cannot call it impact investing. And so I just mentioned the triple bottom line for ESG investing, and the impact outcomes delivered by the impact investing is very, very important difference for us to think about how we can define the impact investing model that we can support the investee, that they do have a robust business model that can deliver clear, can measurable impact. That is what we need anyway. Thank you. 2 points.
Thank you very much, Niven. And Winston, you make some response to Margot's point.
Yeah, I think when I was listening to Margot's talk, first of all, I think it's very interesting because we're not a foundation, we're actually a financial institution. And even though the discussion here really is about impact investing, I think there are 50 years of our history. I think the culture of our company has talked about impact, just impact itself. And it extends to things like financial inclusion, which we've done for the last 50 years. It's including things we've done recently, like opening a school, which is in the south of our island, and hopefully people can visit it. We were there last week to visit with some of our students. So we've done a lot of things in that area, but our stakeholders demand something maybe a little bit different than what Margot does. But at the same time, it's important for us to really reach out into our community over time. And our colleagues will talk about the challenges in the afternoon sessions and the later sessions around generating a return on our investments, which, you know, it's very important for our stakeholders, our colleagues, our shareholders, and society at large. So it is challenging. I think it's very interesting because it's taking some time. Over the last 50 years, we've done a lot. In the last 2 years, we've set up an office to manage this, to look after it, to create structure, create processes. At the end of this, we create this amazing thing, a sustainability report. I was talking to my colleague about it. It's about, I'm guessing it's about 140 pages. It talks about some of the things that we mentioned earlier. It measures our water use, our paper use, our diversity, our continuing education, our support for increasing birth rates, our demographics. All these things are actually reported in our sustainability report. At the end of this year, we'll have we're doing I'm not sure why you call it a pilot, but it's a pilot report on impact. So I guess we're trying to figure out best way to measure as an organization what kind of impact we can make in society. And hopefully it will become a part of our regular reporting. And but the pilot, I think, is just to make sure that we can refine it so it can make a lot of sense, and when people look at it, they can understand what we're talking about. So, you know, we're different, but at the same time, I think we're trying to achieve very similar things that Margot and GIIN is trying to do over time. So those are my comments.
Okay. Thank you, Winston. Margot, you want to say something about maybe your collaboration with financial institution or your different roles?
Well, I'd be glad to. I mean, first, just to comment that I imagine while our institutions are different, that a lot of what's driving us has commonality, right? So whether it's employees, customers, suppliers, this generational shift, the rapid flow of information, the sense that people want to live whole lives and not compartmentalize their values from other decisions or ways that they show up in the world. As I talk to colleagues that might be the chief sustainability officer at a large company, we're seeing and responding to some very similar trends. So that's my first thought as I hear you speak. But more broadly, I would say, yes, we each have unique assets and constraints that we operate under. And so Ford, for example, has participated in sort of layered finance facilities where we will take a first loss position with an amount of capital that's necessarily somewhat constrained, 5, 10, in some cases, after COVID, we made our largest PRI, so that was a couple tens of millions of dollars, that allows larger but more risk-averse pools of capital to participate in a way that's de-risked and so meets their own requirements, but allows us to have an impact at a scale much larger than what we could accomplish on our own. And so I think, finding not only creative ways to partner together, but to try and grow the pie in a way that meets all of our needs is going to be one of the imperatives of our time.
Okay, thank you very much. Sean, you mentioned about several asset classes, and public equity probably the fastest growing area. And also you mentioned about IRIS, the measurement tool. And also, I think Winston also mentioned about the measurement. And also, I also understand you lead a team of people to do some research in the public market. Can you maybe tell us something about what kind of standards you are using in public market to choose the companies that impact investing or impact investors would like to invest? Thank you.
Yeah, I'd be happy to. And also, I should be clear, the GIIN is not an investment organization, so we don't invest into companies, and we also don't advise members on specific investments that they should make. But we do talk with many of the members about their thinking, and we also follow what's happening in the markets. And I thought Winston's comments were very interesting and I think very representative of the trend that we've seen in sustainability in the private sector over the last 10, 15, 20 years. And it's basically been a story of companies trying to internalize environmental and social practices or environmental and social concerns. And I think the best companies have been ones that had a corporate culture that led them to try to look for business models and business practices that were good for the company, but were also good for the customers, for the communities, and for other stakeholders around them. And that was really driven by the culture of the company. I think the change over the last 20 years or so has been an increasing expectation that those practices would be identified, they would be formalized, they would be turned into business processes, and they would be trackable and comparable and measurable. And that's what the best companies have been doing. And that's very much what sustainable investing has focused on in listed markets up to this point. It's been trying to look at companies in a very codified way to try to understand which are the ones that have the best relative practices compared to other ones in their industry sector and their peers. And generally, if you look at what a listed equity strategy often does is it says it invests into companies that are well managed and perform across a range of different characteristics or attributes. think when we look and ask the question of what would impact investing look like within the listed equity space, we've seen companies, we've seen fund managers that have started to develop new practices. I don't think we've yet seen anybody that has a completely new generation or completely different approach. But we have a working group that's going to release a consultation document early next year. And mainly what we've been learning is that the differentiation, or the thing to focus on when looking in listed equities in particular, but impact in general, is how clearly the investment strategy states a purpose, states an objective. And that's the biggest differentiation between an impact strategy and a sustainable one. The more specific or the clearer the investors are about which people, which places, which things they're trying to make a difference for and in what way, and have a set of, we call it a theory of change, but a set of assumptions about what are the kinds of changes or what are the kinds of actions and business models and businesses that will be able to support that sort of a change, and then use metrics to try to measure investments in relation to those. That's when you start to see something that begins to look like a different kind of a listed equity product. And it begins to also develop a different kind of a portfolio of choices than if you take an approach of trying to look at who is the best company relative to their peers across a range of different industry sectors.
Okay.
To jump in, we were approached by a company that was going through its IPO, and they felt like that ability to differentiate in a data-driven way was not there. And so they put together an advisory council, and I was lucky to be part of it, to create something called a Sustainability Principles and Objectives, or SPO framework. And the SEC, the regulator here, I think takes a different approach to approving a differentiated public offering than I might take philosophically. So there's maybe a different ways of thinking about what it means to differentiate yourself at the point of public offering. But I think that company and the others that are similarly trying to differentiate themselves in a way that has integrity and has data behind it, I mean, it's really going to be the tip of the spear, right? As we see more of these companies, a lot of them have watched the evolution of the green bond markets and the self-regulation initially that started to provide some integrity to that label and the data and the certifications now that go behind it. So I feel like we're probably at the cusp of a lot of innovation that's going to be coming from those equities.
Thank you. Thank you both. And Sean, we are very much.
I think okay. Sean makes a very good point in the public side is that as the markets demand these things, like there are all these indices and we're part of these indices as well, is it forces a lot of companies to think about what they do. And the cool thing, like as I mentioned, the coolest thing about China Trust, I think, is as we go through this process, and this is not a commercial actually, the coolest thing about this is we've gone through this process, a lot of our colleagues go through this process with outside parties, is we think about, wow, we already do this. We already do that, right? And so I think as companies think about this and they go, wow, we do this, then we think about how can we make it better? How can we make it more codified, how process-driven, so that we can actually get better at it? So that, you know, once you start measuring things, you try to get better at it, unfortunately. And because we're investors, that's the hardest part, is we're always measuring stuff. But it is very important that it does help us get better at making an impact in the world. So I think the public markets, and it started in the private markets, but I think in the public markets, it will become bigger and bigger part of it as firms have to make returns and show to their investors they're doing things.
Thank you. Thank you, Winston. Actually, I just want to tell Sean that we are very much expected to see your working paper early next year. Thank you very much for that. And one question for Margot. We understand that the collaboration is a very important keyword in impact investing. There are so many different types of collaboration. We also understand that your Ford Foundation has a collaboration with NEKC Foundation to form a platform called MIE, Mission Investors Exchange. It's a platform for mission investors to exchange ideas, information, learning, and also information for investment projects. Like to know how this MIE works. It's as you were expected, or do you have any thinking about the possibility to expand to maybe Asia or Taiwan, or you will recommend we do something here similar and work with you in the States?
Right. I love the spirit of that question, because I do think, we go further if we go together. What is that phrase? If you want to go fast, go alone. If you want to go far, go together. I think that is worth living. And Ford is part of.
We don't know this is temporary or permanent, because the time is almost there. So maybe for a question for Winston, because you are the first member of GIIN. Any expectation from GIIN about what they can do for you in particular, or for the financial industries in general in Taiwan?
I think as Margot mentioned, I think it's important to work together, right? So including in Taiwan, in sustainability, for example, we've made numbers of investments, especially in the offshore wind area, and our colleagues at Cathay, our colleagues at Fubon, and people with deep pockets, we've all been part of this. So I think it's not just us. We have to make sure that there's a momentum that we can build, not with just financial institutions, but with our customers, with our stakeholders, so that everybody works together to get this done. Being part of organizations like GIIN is very important, because we learn things that we normally may not have access to. There'll be measurement tools that they provide. They see things in other parts of the world where we're not present, even though we try to be a very global organization. We're throughout Asia, but our presence in Europe, for example, is very, very, very minor. So it's important for us to get perspective and understanding from other areas, and that's very important of being a part of a global organization.
Thank you, Winston. Cannot agree more. Thank you very much. And I think our time is about, so this session is adjourned. And thank you very much for our speakers from New York and our panelists here. Thank you. Thank you very much. Thank you for your listening.